Good morning, friends. So today I'm going to discuss the conundrum of additions made under section 68 to 69D and the burden of proof in case the assessment is made under this section. So before I discuss the burden of proof in these sections and how this burden of proof is to be discharged, I want to go a little back in the history and talk about the genesis of these sections. You see, this section 68 to 69D, they are all almost similarly worded sections, save and except the fact that the purpose of each section is little bit different, but the all pervasive purpose of all these sections is to curb the generation and proliferation of black money. Basically, these provisions are inserted to take care of what is called the accommodation entries, or loosely what is called in the language that we talk, the Jama Kharch transactions. So what happens, I mean, so let me tell you how you see the this black money is generated. So let us assume that somebody has, say, 50 lakhs or 1 crore of black money, which is money on which the tax has not been paid. So basically, the black money means a money on which the tax has not been paid, and the purpose of using various devices to convert the black money into white money arises because ultimately, you see, anybody who has that money has to use it for some purpose. And suppose he wants to invest in his legitimate business, or he wants to buy a property, then all of his black money cannot be used to do the business because there is some white money which will be required to conduct the business. So therefore, they look for some accommodation entry provider who enables them to convert this black money into white. So what is generally done is that the person who is holding cash gives this cash to somebody, an operator who is maintaining a company or who is an individual who gives this money. So you see, what happens is that suppose I am in possession of the huge amount of cash and I want to use it for legitimate purpose. Say I want to invest it in my own company. Then what one does is that one gives it to a, say, company which is a, there are several companies which are only paper companies. They do no real transaction. Their only purpose is to provide accommodation entry. So they will invest in my company. I hand over the cash to them. They invest in my company either in form of share capital or, say, gives me a loan. So these are all paper transactions. The entity is also in many cases a paper company. So through this paper company, or there are suppose individual who have tax paid money and they don't have the use of that tax paid money, then one gives them the cash and they give it in form of, say, share capital or loan or gifts. In earlier times, one of the very standard mode of this kind of transaction was gifts. So a gift deed used to be prepared. I'm talking about, say, 25, 30 years back. So gift deed used to be prepared, and anybody who is not even a relative of yours, he will give you a gift, and in the usual, I mean, in a gift deed, it will be written that the gift has been given out of natural love and affection. And you hand over the cash to that individual. If you talk about some 25, 30 years back, then there used to be income tax file in the name of non-existing persons. So the tax professionals who does, you see, return filing and all that, he may not necessarily be a qualified professional, but there were many who used to just run fake files. That means they will open a file, income tax file, in the name of non-existing person, because earlier there was not so much of KYC related requirement. You just need to be introduced to a bank for opening of a bank account. And if two people introduces and the bank manager is willing to accommodate you, then the bank account can be easily opened without any much difficulty. And that bank account may be in the name of an existing person who is alive. And I know personally there are cases where the bank account used to get opened even in the name of non-existing person. So through that bank account, every year you will keep accumulating some white money. That means, suppose the taxable limit is say 1 lakh or 50,000 rupees, then the income tax return will be filed below that maximum permissible limit, or some say 500,000 rupees of tax will be paid, and an income tax file gets created. And through that file, this accommodation entry providers used to give either gift or loan or invest in companies. There were many accommodation entry providers who used to run fake entities. Fake in the means they were real entities having the PAN, bank account, memorandum and article association and everything. But in reality, there was no business activity. They used to show investment coming to them in form of share capital, and that money will be invested in the real companies, which will be accommodation entry, and that through this accommodation entry, black money will be converted into white. So in order to curb all these kind of practices, this section 68 to 69D were inserted in law, and I will quickly take you through what these sections provides. So section 68 says that if any sum is found credited in the books of an assessee, and the assessee is not able to offer any explanation about the nature and source thereof, or the explanation offered by him is not satisfactory in the opinion of the assessing officer, then the sum so credited will be deemed to be the income of the assessing year in that previous year in which such sum is found to be credited. So this section 68 to 69D are all deeming provision. So there is a presumption that if this money is lying credited in my books of accounts, then, and I am not able to offer any proper explanation about the nature and source thereof, or the explanation offered by me is not satisfactory, then it will be deemed to be my income. Similarly, section 69 is there, which talks about unexplained investment. So if any investment is made by me, but it is not recorded in the books of accounts, so it is reverse of section 69. 68. Section 68 talks about any credit in my books of accounts, but explanation is not there. Section 69 talks about that investment is fine, but that investment is not recorded in the books of accounts. And I am not able to explain the source of such investment or the nature from where I have generated money to invest. Then the addition can be made. Section 69A is a section where I am found to be in honor. So the word used in the section 69A is that I am found to be the owner of any money, bullion, jewelry, or other valuable article. And such money, bullion, jewelry, or valuable article is not recorded in the books of accounts. And I am not in a position to explain the source of the acquisition of that money, bullion, jewelry, or other valuable article, or that explanation is not satisfactory. Now, this section 69A, even though it uses the word that I am found to be the owner of the money or bullion or the jewelry, but it follows the common law 110 of the Evidence Act. So under section 110 of the Evidence Act, if I am found to be in possession of something, then the onus is on me to prove that I am not the owner of that article which is found in my possession. So even though word used in section 69A is owner of any money, bullion, jewelry, or article. So if during any search or seizure proceeding, if something is found in my house or in my office, if any cash is found, any money is found, or jewelry is found, or any valuable article is found, then unless I am over to give any reasonable explanation as to who is either the owner, either I furnish the proof of the ownership of that article or the money or the jewelry, the presumption will be that I am the owner. So I think even though the word used in section 69A is owner, but for all practical purpose, it is possession. So if I am found to be in possession of any money, bullion, jewelry, or article, then I will be deemed to be owner of that article or the jewelry. Another important aspect of this section 69A is that it will be deemed to be the income in which it is discovered. So here the limitation period as it is there in section 149 also does not apply. It is almost analogous to Black Money Act, where if I am found to be holding any unexplained foreign assets, I am found to that I am the owner of any unexplained foreign assets, then the year in which the income tax authority discovers or discovers that unexplained foreign asset, I will be charged to 30% plus 90% tax in that year in which such unexplained foreign asset is discovered. So one cannot take the plea that whatever may be the period of limitation under 149, it has changed from time to time. Even in 2001, there was an amendment. Last year also, there was an amendment in the time period. So I am not going into the discussion of 149. But the limitation prescribed in section 149 does not apply to section 69A. Then there is section 69B, where I am found to be the owner of any jewelry or bullion or other valuable article. And the value or the amount acquired to own such jewelry or bullion exceeds the amount which is recorded in the books of accounts, and the explanation offered is not sufficient, then also it will be deemed to be the income in the year in which such discovery is made. Further, there is an unexplained expenditure under section 69C, which says that if I have incurred any expenditure, then obviously it has to be from my books of accounts only. So if there is any expenditure and I'm unable to offer any explanation, then also it is liable to be added in the year in which such discovery is made. Now here one important aspect is that all this discovery with respect to the books of accounts has to be from my books of accounts. So if any discovery is made, suppose somebody says that that person has lended me money and I have not recorded it, then it is up to the person who has recorded it in his books of accounts to explain. And if he is not able to explain, then the addition will be made in the books of in that person's hand and not in my hand. So somebody fraudulently shows that he has lended me money or he has invested in my company, whereas there is no corresponding entry in my books of accounts, then I am not bound to give any explanation with respect to somebody else's books of accounts. So it is only with respect to my books of accounts that I have to give explanation. Further, with respect to books of accounts also, I think it would be important to refer to the judgment of the Honorable Supreme Court in the case of CBI versus VC Shukla, reported in AIR 1998 SC page number 1406. That judgment is in the context of Jain Hawala diaries, wherein the notebooks and file containing loose sheets of paper, not in forms of books of accounts, were discovered. And Supreme Court held that such loose papers or sheets are irrelevant and are not admissible under Section 34 of the Evidence Act, which refers to the books of accounts regularly kept. So if anybody is regularly keeping any books of accounts, so the books of accounts word is also defined in the Income Tax Act. And Section 2, subsection 12 says that books or books of accounts includes any ledgers, day books, cash books, account books, or other books, whether kept in written form or in electronic form or digital form, or as printouts of data stored in such electronic form. So the meaning thereby that it has to be a regular books of accounts. So if there is any, you see, entry which is kept in a loose sheet, then it cannot be considered as a books of accounts. The department may make addition on the basis of additional proof if it is in if the department is able to unearth any such evidence, but merely on the basis of any loose sheet HTC, it cannot be considered as books of accounts, and therefore no explanation need to be made with under Section 68 or any of these sections. Now coming back to this Section 68 to 68D, one important aspect is that in the 1922 Income Tax Act, these provisions were not there, but still the additions were made because these sections are general propositions of law. So even in the absence of these sections, the addition used to be made even under the old Act of 1922. But with these sections there in the Act itself, the advantage to the department is that now these sections, by virtue of the deeming fiction, there is a difference between the legal fiction and the presumption. Legal fiction deems something as a fact, which may be totally false. So if something which is not true may be deemed to be something by law, and it cannot be rebutted by any evidence. But if any presumption is there, then the presumption can be rebutted by adducing evidence. So that is where you see the concept of burden of proof comes into being. That in all this section, the initial presumption is that it will be deemed to be your income. If you are unable to offer any reasonable explanation, I will come in a minute to discuss about what is a explanation and how the burden of proof can be discharged by an SSE. But the initial presumption will be, or the inference will be, that it will be deemed to be the income of the SSE. If I suppose any credit is found, if suppose a loan entry is found in my books, if any investment is found in my books, and I am unable to offer any reasonable explanation, then it will be deemed to be the income whenever any such entry is found. But these are all rebuttable presumption. If so, initial presumption is in favor of the department, but then the burden of proof shifts to the SSE. So the initial burden of proof is that I may be in a position to offer reasonable explanation. So burden is a statutory obligation or liability, and proof is a compendium of factual evidences which I produce, and then the burden shifts to the department. So initial presumption is in favor of the department. If I am able to offer a reasonable explanation, then my burden of proof is discharged. And once my burden of proof is discharged, then the burden shifts to the department. And then it is for the department to do investigation and come to the conclusion that the explanation offered by me is not reasonable.
So
if I say initially the SSE has to discharge in essentially three burdens. One is identity of the creditor. Second is so there are three burdens which an SSE must discharge, or three owners. That is the identity of the creditor, the capacity of the editor to advance money, whether in form of share capital, investment, or loan, and third is the genuineness of the transaction. So how do I establish the first burden, that is of the identity of the creditor? So if it is a known corporate lender, then I can establish the identity of that creditor through PAN, Aadhaar card, bank particular, assessment done in the name of that person who has lended me money. I can ask the department to issue a 131 notice summon to him and ask him to be personally present. I can furnish his ITR and passport. So these are the evidences through which I can establish the identity. And in my opinion, if anybody is taking money from an individual, either in form of share capital or loan, then one must take sufficient precaution that in order to establish his identity later on in case of assessment, you have the documentary evidences to establish his identity through this PAN card, Aadhaar card, his ITR of that particular year in which he has lended you the money. If any 143(1) or 143 assessment order is there, then that also you take, his bank statement and all that, and other such documentary proof like passport. Second is in case of a corporate lender, again it can be established through bank PAN number, then assessment order, certificate of incorporation, memorandum and article association, and all that, and the various forms submitted to ROC or MCA. In case of a non-resident lender, it can be explained through passport, certificate of residency, the tax assessment order by the authority of the country of residence, citizenship identification number. If it is a company, then certificate of incorporation and all that. Now, the second issue is credit worthiness. Now, the credit worthiness, how it can be explained? That he was credit worthy means he was having the sufficient capacity to lend me money. Now, that capacity can be explained by submitting the his balance sheet, that is assets and liabilities, showing that he had the adequate worth to lend me money. His bank statement showing that he was having the sufficient balance before lending me money. So it is not that either I have lended it in form of cash or through other means, the money to him, there was almost negligible amount lying in his bank account, and thereafter he has lended me money, and past history of assets and lending activities, and also his adequate earning. So we can furnish, you see, 2-3 years assessment orders, income tax return, balance sheet, and all that to establish his credit worthiness. Now, the genuineness of the transaction. Now, the genuineness of the transaction is explained. Suppose I have taken loan. Then what is the security which I have given in lieu of the loan? Generally, anybody who is giving loan will like to have some corporate guarantee or bank guarantee or some security in form of say assets. Then regularly I am paying him interest, deducting TDS, then regular return of the amount, whether in form of monthly or yearly installments, then transaction through banking channels, then confirmatory letters. So year to year, I should have a confirmation also. And in case you see any inquiry is done, then the lenders should respond to the notices issued by the assessing authority, and also cooperate with the assessing authority to establish the genuineness of the transaction. So generally, one has to establish that it is an arm's length transaction. If it is an arm's length transaction, then obviously it is genuine transaction. So you see, once all this is done, then the onus or the burden shifts to the assessing officer. Now he cannot sit with folded hands and do addition simply on the basis of his assumption and presumption. He cannot discard the proof given by you on the basis of preponderance of probability. Then it is his duty to adduce sufficient evidence to discard the evidences furnished by you. The process undertaken by him to discard your validity of the transaction must be half-hearted, and it cannot be that he will do some perfunctory analysis sitting in his chamber and then he will make an addition. For example, if I request the assessing officer to summon the concerned person, then the assessing officer is bound to exercise his power under section 131 to summon him and do the necessary inquiry. If he fails to do so, then it will be presumed that you have been not given the sufficient opportunity to discharge your burden. So while the initial burden is upon me, but even to enable me to discharge my burden, the assessing officer has to cooperate with me. If he fails to cooperate with me, then it can be presumed that he has not discharged his burden, which is upon him, and any such addition made on the basis of such half-hearted analysis of the evidences produced by you is liable to be set aside by the tribunal or the courts. Now, I would like to give you two case studies whereby you see in one case the SSE's burden was not considered to be discharged, and in one case the revenue officer's burden was not considered to be discharged. So here an SSE files his return of income and he explains in writing that a sum of money has been gifted to him by one person who is a relative based in USA. He also furnishes a confirmation letter from that resident of USA and informs the assessing officer in writing that the donor is available in India due to the demise of his mother-in-law, and therefore he can be examined personally. He also furnishes his complete details in form of address and mobile number. But the assessing officer took the view that the donor has not furnished sufficient detail and the bank account furnished by him did not disclose the account from which such and such amount was received, and the identity, creditworthiness, and the genuineness of the transaction could not be verified. He did not bother to contact the donor, even though the letter was given by him, and he passed an order making an addition. Now, this particular addition was deleted by the tribunal on the ground that the SSE has discharged its burden, but the assessing officer has failed to take any step to examine the donor or to make any independent inquiry with respect to the gift, and therefore section 68 of the act was not invocable, and the deletion was and the deletion of the assessment was done by the IT, which was ultimately upheld by the High Court. In another case, that is also a gift, case of gift, whereby the gift was received, but the recipient was not able to produce any evidence with respect to, she stated that she has received some cash gifts from her parents, 1 lakh from mother, 1 lakh from father. Now, to corroborate, when the officer asked, she said that their parents derived the amount of gift through agricultural land. But she was not able to produce any evidence to show that her parents were in possession of any agricultural land, or they were in sound financial position to gift her 2 lakh rupees. So therefore, in this particular case, it was held that the SSE has not been able to discharge her burden, and therefore addition was upheld. Now, there are a couple of other issues which I would like to discuss. One is the source of source. You see, till 2012, there are a number of judicial precedents which have held that SSE is only required to explain the identity and creditworthiness of the lender, but he is not required to show the creditworthiness of the creditor, the person who has lended him money. So in short, he is not required to explain the source of source. So suppose A has lended him money and A has received money from B. Then the person, suppose I have received money from A, then I was only required to explain the creditworthiness and identity of A. There was no burden upon me to explain the creditworthiness and identity of B. But in 2012, an amendment was made with respect to the share capital. So if I have received any share application money or the share capital, and I am not a public limited company, I am a private limited company, then I am not only required to explain the source, but I am also required to explain the source of the source. And a similar amendment has been made in 2022 with respect to loan. So if I have received a loan or borrowing from anybody, then I am not only required to explain the source or the genuineness or the credit worthiness of the my lender, not only my lender, but also the credit, the source from which that lender has given me the money. So I'm also now required to explain the source of the source. So one has to go 2 steps below. Now the question may arise whether these amendments are retrospective or prospective. Now that can be answered if one examines whether these amendments can be considered to be clarificatory or procedural in nature. So usually if any amendment is a clarificatory or procedural, then they are supposed to be retrospective. And if any substantial amendment is done, then it is considered to be retrospective, prospective. In this particular case, in my opinion, these amendments are neither clarificatory nor they are procedural in nature. They are quite a substantial amendment, and therefore they will apply with effect from the date when the amendments were made. So with respect to the share application, it will apply from 2012 onwards. So if I have received any share application money after 2012, then I need to explain source of source. With respect to loan, I need to explain source of source with effect from 2022. Now, another issue which may arise is, and which I believe one can challenge before the court of law, is whether they will satisfy Article 14. Because Article 14 that if any law is unreasonable to the extent that it may be virtually impossible for me to explain the source of source, then the provision may be read down in a facts and circumstances of a case. For example, I have taken money from a foreign lender, or my investor is a foreign company. Then it may be impossible for me to explain the source of source. Even within India, if my lender or my investor is refusing to cooperate, and I request to the assessing officer that, look, he is refusing to give his source of source, so you make an inquiry under 131. And if the assessing officer fails to do the necessary inquiry to enable me or to help me to explain the source of the source, then also this provision may be read down, and you see the assessment may be deleted. So how these particular provisions will develop, we will be able to see in the future. But in my view, these provisions definitely puts a very onerous and unreasonable burden upon any assessee. With this, I guess I would like to conclude my today's session. There are a couple of inquiries as I can see in the
Sir, can
chat
we
box.
ask doubts?
Hello.
Hello, sir, can you hear me?
Yes.
Sir, can we ask doubts? Sir, actually, I wish to know, sir, if you see
Yes,
the
yes, I'll come to your doubts. There are a couple of questions in my chat box. So let me answer that those questions, queries first, and then I will come back to you. You can raise your query definitely. 1 second. Mr. Saurav is asking how the plea for cross-examination of third party will be used, where the income tax department has aged income under section 68 on the basis of investigation in the statement of third party without any opportunity of cross-examination to the client by saying that it is not required during the course of proceeding. Now, according to me, there are two issues here. One is Section 68 itself. So, first of all, it fails the requirement of Section 68 itself, in my view, because it talks about when any sum is found credited in the books of an SSE. So suppose any third party statement is taken and that third party is saying that he has lended me the money, and if it is not recorded in my books of accounts, then Section 68 will have no application. Secondly, even if suppose, presuming that Section 68 or any of these Section 68 to 69D applies, even then, the normal rule of law is that if any addition is made on the basis of any third party statement, then there are two things. One is that I must be furnished the copy of that relied upon document. And secondly, I must be given a benefit of cross-examination. If neither of the two is done, or either one of the two is not done, then it will be a violation of principle of natural justice. It will be a violation of Article 14 of the Constitution of India. And therefore, any such addition is liable to be set aside. And in fact, I would advise that if any such addition is proposed to be even made, without furnishing you the benefit of cross-examination or without furnishing you the copy of the statement, one can straight away approach the High Court and get it set aside. Now, there is a question by Mr. Rakesh Saini that ABC company received investment in plant and machinery from XYS company and equity shares are issued by ABC company to XYZ company. ABC company received investment in plant and machinery from XYS company and equity shares are issued by ABC company to XYZ company. Department issued notice under section 133(6) to XYZ to explain about source of fund and confirmation regarding investment in ABC. XYZ not responded that notice. Making it as a base, department issued notice to ABC company for amount invested by XYZ company should not be considered as unexplained credit and taxed under section 68. I think the stand of the department is perfectly justified, particularly as we can see with the amendment of section 68 with effect from 2012, that now I am not only required to explain the source, but the source of source. Since ABC has received investment from XYZ, XYZ is not responding. So on that basis, the department is perfectly justified to issue me a notice and explain the source of investment by XYZ. Since XYZ is not cooperating with the department, but I have a commercial, contractual, and XYZ seems to be my investor in my company, then I should be in a position to approach XYZ and furnish the necessary explanation. If I am not able to do so, then obviously the addition under section 68 will be perfectly justified in my opinion. Now, any other queries?
Yes, sir. Sir, in
Yes.
section 68, there is a second proviso which talks about that if the company issuing shares. So, sir,
Yes.
the clause A of the second proviso talks about where the resident, where the person is a resident, means the issuer
Correct.
is a resident. So, are we not covering the non-residents here?
Yes, this is not.
So, if we
This
apply Article 14.
No, you see, the thing is that with respect to the first label, so if any sum is credited in my books of accounts and I have received the money from whether resident or non-resident, it does not matter. It may be in form of an investment, it may be in form of a loan. So with respect to my first label of inquiry, that is my source, I have to satisfy the credit worthiness, the identity, and the genuineness of the transaction with respect to the first label, irrespective of the country of resident of my investor. But with respect to the second level, that is source of source, that person must be a resident. So my investor, if I have to explain the source of the source, then the lawmaker has tried to be reasonable in the sense that that person must be a resident. So with respect to the investment, that person must be a resident. But with respect to a loan, that investor may be a non-resident also. Even then I will be bound to give the explanation of the source of source. So you can see the difference between the first proviso and the second proviso. First proviso does not refer to explanation of the source of source, irrespective of the country of the resident. But with respect to the investment in the company in form of a share or share application money, that my investor should be a resident to put the burden upon me to give the explanation of source of source.
Sir, do you think Article 14 here, the reason why we are excluding is because it is only for the convenience of the SSE, because it is difficult for him
Yes,
to...
correct. It is for the convenience of the SSE, but that same convenience is not considered for loan.
Fine, sir.
And
sir,
even with respect to the residence, I may be having a perfectly, you see, good relationship with my investor or my lender. But I cannot have any control over the lender of my lender, because he may have received money through, say, business income or loan or any other form. So it may be very difficult for me to give explanation of source of source. So that is why I said that in a given fact and circumstance, I may be in a position to demonstrate that it is practically impossible for me to give the explanation of the source, and I may put burden on the department to take the help of the department to enable me to unearth the source of the source.
And sir, one more thing, sir, section 68, it says that if it is credited, if some money is credited and we are not able to offer any explanation for the same, so it is applicable even if we have already, paid taxes on the same and reported that income?
No, not at all.
Obviously.
Not at all. What it talks about, if any sum is credited in my books of accounts, there are two things. One is nature and source. So if my nature and source, that is if it is my tax paid income, and my explanation, then my explanation offered has to be accepted. But you see, it talks about the previous year. So if suppose
Yes,
I have already offered that credit in form of an income, then it does not remain any unexplained credit, cash credit. It is already explained by me. If I have already accounted for to that credit in form of an income, then where is the question of asking any explanation about the same?
Sir, can I ask you a question?
Yes, tell me.
Sir, if I received a jewelry or gold from my forefathers,
yes,
and they have not disclosed anywhere,
correct.
Now I'm disclosing what I will do that.
You see, again, you see, it talks about if you are found to be in now we are going to section 69A.
Yeah.
So you are found to be the owner of any money, bullion, jewelry, or other valuable article.
Yeah.
Number one is that it is not recorded in the books of accounts maintained by you.
No.
And secondly, listen to me 1 second.
Please.
And I am not able to offer proper explanation about the nature and source of acquisition. So if you are able to demonstrate and give a proper explanation that it was a money received from your forefather, it is not your, it was not acquired by you, it was acquired by your forefather, and whether they have paid the tax or not, it is not within the domain of your knowledge, then it is, according to me, it is a perfect explanation, and that explanation has to be accepted by the assessing officer, provided you are able to demonstrate that it is coming to you through heredity.
Sir, how to prove that this is only department not ready to explain any explanation, not ready to accept any explanation.
No, it has to be, you see, through your books of accounts only. Suppose from year after year, if you are recording it in your books of accounts, a jewelry of a particular value, you got it valued, say, many cases, what people do is that once they have the ancestral jewelry, then they get it valued from a respectable jeweler. And once that value, you are in possession of that valuation certificate, and you record it in your books of accounts or your while furnishing your return, you include it in your assets, then that will be your explanation. So that is why it is very important that you prepare a proper profit and loss account and balance sheet while preparing your return of income, so that if any on a later date, if your assessment is done, then you will be in a position to explain that, you see, look, I got this jewelry from my ancestors, and I got it valued in so and so year.
Sir, the same fight when he recorded on same year they objected. Before that, I have not received and not recorded anywhere. On the same first year, which when I recorded in the books of accounts, the problem created.
So in the first year itself, it was added to your income.
Yeah.
So is it a real case?
Yes.
I think it's a very peculiar case, and I think now you see the law says that the onus is upon you to give a or offer a reasonable explanation. So,
Sir, in this case, just explained by Mr. Prakash,
yes.
if see first year similar cases with our one of our client, what has happened?
Yes.
Then we produce all the document. Basically, he was salaried person earlier. Then he started the business in the first year, and in first year he show his all of his disclose all of his assets, and they added back the entire amount of the capital account as the unexplained source. Then we approach
Okay.
to the higher authorities, and we prove that this person has the capacity and he has earned. We produce the all salary certificates, its previous in the year income, and from that we try to link and justify all the document. To
Correct.
some extent, they are agree. So now my question is something else. Suppose my income is more than 50 lakh rupees, then it is
Right.
necessary to disclose in my income tax return itself. Maybe I may be a salaried person, but I have to disclose it in the in my income tax return the assets which are not
Right.
recorded in books of account. Suppose if I am disclosing all the asset therein year by year, then
Yes.
I can take the plea that this is a proper disclosure.
Correct. Correct. Absolutely.
Thank you.
Sir, actually, case is that my father received from his father. I have received from him. The jewelry is more than 75 years old. And no one has been declared anywhere.
No, I'm asking you, is your father alive?
No, he expired before 15 years back.
May I say something in this case? This is my
Yes, sir.
personal opinion. Suppose as explained by Mr. Prakash ji, he is telling that he has received it from his ancestors. So whether any wealth tax return at the time when the wealth tax was there, if they have filed, then it's a very good cushion to them.
Because 75 years old back, there was no system like that. And nobody was aware that they are totally illiterate person in that purpose.
No, sir, just I'm supporting it. If you have done this, then it is a very good case. But your facts are very peculiar.
You see, I'm telling you one thing. You see, the section is presumptive. Now, if you say that is my ancestral property or jewelry or bullion or whatever it is, the burden is upon you. Now, how you discharge his burden is also upon you. So, in your case, in form of some old, you see, family settlement, because usually all these kind of things, whenever you see you receive this kind of jewelry and you have more than one legal year, then there is some family settlement, there may be some succession certificate, legal year certificate, or say probate, or any such document through which it has come to you. If you are not the only legal year, then usually some sort of documentation is done to pass on the property, either in form of a succession certificate or probate, or some, it may be even some, say, a personal family settlement where this kind of asset is recorded. So
सर उस समय
usually
कुछ भी
it-
ऐसा नहीं हुआ था, बस अब बर्बल जो हो गया बस ये दिक्कत रही है।
क्योंकि फैमिली सेटलमेंट में तो देखिए कुछ ना कुछ तो है, भले ही लूज कागज में हो या कुछ तो हो, मतलब यूजुअली मैंने देखा नहीं है कि कोई कागज उसका कोई एंसेस्ट्रल प्रॉपर्टी का, बिकॉज ऑलवेज इनवेरिएबली देयर आर मोर देन वन क्लेमेंट टू दिस काइंड ऑफ प्रॉपर्टीज. सो इवन इफ सपोज नॉट properly legal settlement, I mean probate or succession certificate or legal year certificate, but कुछ तो लोग करते ही हैं. या
अब
कोई
नहीं है
मान
सर,
लीजिए
देखे
कोई
भी तो
ज्वेलर का जब खरीदा तो उसका कोई कागज रहता है, कुछ तो आदमी रखता है या अपने
सर 100 साल पुरानी बात है, कौन 100 साल पुरानी बात को कहाँ से
100
ला
साल
क्या
पुराना
कर।
उस तरह का कागज नहीं होता है. आई एग्री विथ यू, लेकिन कोई फैमिली सेटलमेंट से तो वो बात निकल के आ जाती है यूजुअली. बट अगर कुछ भी नहीं है, देन यू हैव ए डिफिकल्ट केस इन हैंड, आई वुड से.
सर उस केस में कैसे थी, जो हमारे पास प्रॉपर्टी है उसका फोटो वगैरह दिखाई कि वो इतनी पुरानी प्रॉपर्टी, वो बुलियन ज्वेलरी है।
प्रॉपर्टी तो इजी है
सॉरी,
एक्सप्लेन करना,
ज्वेलरी
प्रॉपर्टी
सर।
में डिफिकल्ट नहीं है.
सर
मूवेबल
ज्वेलरी
एसेट ज्वेलरी वगैरह में या कैश पड़ा हुआ हो, उसको एक्सप्लेन करना थोड़ा
मुश्किल तो है सर।
मुश्किल होता है। प्रॉपर्टी में तो रजिस्ट्री वगैरह सब मिल जाती है, प्रॉपर्टी में तो रजिस्ट्री
हाँ
मिल जाती है, बाकी मेन प्रॉब्लम आती है कैश एंड ज्वेलरी में।
हाँ कैश
ज्वेलरी ज्वेलरी में सर मेरा सबमिशन ये था कि जैसे पुरानी ज्वेलरी होती है, यदि जो बहुत पुरानी ज्वेलरी थी सर उनकी स्टाइल ही अलग होती है। जैसे हमारे दादा की है, हमारे घर पे भी है, तो उनकी ना बनी उनकी कढ़ाई, उनकी बुनाई बनाने का तरीका बिल्कुल अलग ही होता है। मोटी मोटी पजेब है और उनके पैरों के बड़े बड़े वो होते हैं, क्या नाम है। तो उनके यदि फोटोग्राफ इनके पास हो, आई थिंक इट विल हैव him to prove that it is the old jewelry and it's related to my.
Okay, now let us move to the next question. Mr.
Please.
K. Hanmadalu has raised a question that whether cash flow statement sufficient evidence to explain the source for credit in the books of accounts. Yes, cash flow statement may be one of the way to explain, but ultimately if you are talking about the ability to lend, that the capacity to lend, then in addition to the cash flow statement, you should also furnish the statement of assets and liabilities to show the net worth of the person who is lending you the money. So net worth is the main thing. More than the cash flow, it is the net worth through which you are able to satisfy the ability of the lender or the capacity of the lender. He is also suggesting that photos wearing jewelry by ancestors may be evidence. Okay, so I think
One last
there are
question.
no.
Sir, you
Yes.
mentioned that a Supreme Court ruling wherein it was mentioned that loose papers are not books. So isn't it enough indication if I have loose papers? So like why is the court saying that it should not be considered books? Because this is quite an indication that
Because books of accounts is defined in the law, and the books of accounts cannot be the loose sheets. It has to be debits and credits. In a loose sheet, there is no debit credit. It is maintained in a tabular format. So if you are talking about the books of accounts, it has in the income tax itself, it is talking about the, if I may refer to the definition. It says that ledgers, day books, cash books, account books, and other books. So other books, you have to apply the principle of eudem generis, where you see it will take its color from the previous specific words, that is ledger, day books, cash book, and account book. So, and these are all books which are maintained in a double entry system where you see there is a debit, somebody is a lender, somebody is a recipient. So these loose sheets where you see some entry is made in a coded form or in a loose sheet, that cannot be considered as a books of account.
So this means department will be totally disregarding the loose sheets and will not take any action.
No, they may certainly take action. They may ask you explanation. They may build upon it to gather further evidence.
Sir, these
That
are
may be
considered
a starting
supportive
point.
evidences.
That may give assumption or you see suspicion to the assessing officer to do further investigation. But suppose any addition is made only on the basis of that entry in which is not a books of accounts and it is a loot sheet, then section 68 will not apply. And otherwise also such a addition, considering that addition is not a, you see, on the basis of a credible material, it is liable to be set aside.
Okay, so this means department can do something.
You see, I will give you another example in the context of central excise law. You see, there used to be addition on the basis of suppose loose entry is found with respect to clandestine sale. Suppose I am maintaining entry of say I have sold goods to somebody and that entry is without any payment of tax. Now an addition is made that I have sold these goods. So addition is made under the Sale Tax Act, addition is made under central excise. Now GST law is there. So there are numerous judgments which says that merely making addition on the basis of such loose sheets is not permissible. Department has to, the burden, if the department is making addition on the basis of such loose sheets, the burden is on the revenue. You see, whenever there is any allegation of malafide and the department is seeking to make addition on the basis of such malafide, the burden is on the revenue, not on you. You see, here the burden is on the SSE on the basis of this deeming provision, section 68, 69A and all that. But if it is a loose sheet, then the burden is not upon me because the assertion is of the department that this is my income. Then the burden is entirely on the department to start with to establish that this is my income. Burden is not upon me. You see, there are cases where the initial burden is on the SSE, like these kind of presumptive provisions. But if you talk generally, and the department is seeking to levy any tax upon you, that mere assertion is of no avail. The assertion has to be on the basis of some credible material and credible evidences, and that in those cases the burden is on the department, not upon you. That is why these additions will not be valid.
Sir, for example, on the basis of loose sheets, the department is able to make out
Okay,
that
I will
it
give
is
you one Supreme Court judgment with respect to the burden of proof of the department. Just give me 1 minute. Just give me 1 minute. there is a judgment of the Supreme Court in the case of Universe Textile versus Commissioner of Central Excise. I am putting it in the chat box. Yes, there is one more judgment also. Union Garware Nylon. So two judgments I have posted in the chat box.
So just last thing, sir, since the opening line of section 68 starts with the books of accounts only, so even if on the basis of loose papers, the department makes out that it is indeed the SEC's income only, even though there are
Yes.
no books of accounts, this means that section 68 still can't be touched. Maybe some other section the department.
Correct.
Fine, sir.
Section 68 will come into play only from your books of accounts which you are maintaining, not otherwise. Not
Yes, sir.
somebody else's books of accounts, not some loose sheets. So that is very clear. Now another query, whether assessing officer can make an addition merely on the ground of non-appearance of the creditor. Now, merely on the basis of the non-appearance of the creditor, usually you see the various judicial precedent says that that cannot be the only basis of the making of the addition. But now with the changed circumstance, where you see in 2022, the source of source, the liability is upon me. So in that scenario, the established jurisprudence may change in future. But you see, again, I may be in a position to perfectly establish the genuineness because I may, as soon as I took the loan, I am satisfying all the criteria. That is credit worthiness, the identity and the capacity, the genuineness of the transaction, everything. Then merely because my creditor or the lender is not responding to 131 notices, the addition should not be made. So friends, with this, I would like to conclude today's session. Thank you very much.